6, 5, 4, 3, 2, 1.
Hello, how are you doing? Welcome along to FTUK's non-farm payroll live stream for the December jobs data out of the Bureau of Labour Statistics, and a happy new year to you. Welcome to 2025. Hope you're doing well. I apologise for my voice. I have had the most horrendous flu all week, and my voice has been coughing and spluttering. It's been a nightmare. So if I'm coughing throughout the stream, then I am very, very sorry about that. Very, very nasty indeed. But what can you do? That's the winter flu. If you've not had the winter flu, by the way, then I am, I'm very, very jealous indeed. You do not want to get it. It is particularly nasty. But what can you do? Take an aspirin and crack on. Let's have a look at what we are doing today. It is the non-farm payrolls, and we are looking for 160,000 new jobs out of the United States for December. That changed from 154, I think it was yesterday or earlier on today. So there's just been a fluctuation in that consensus number. We've got a cooling jobs market. That is what we've got in front of us. The unemployment rate, that is not expected to change much at all. It's completely flat, 4.2%. And for me, I think that's going to be a little bit of a nothing burger today, along with the average hourly earnings as well. Year-on-year rate, flat at 4%. The month-on-month rate as well, just a slight tick down to 0.3. I don't think they are going to have much of an effect at all. So we will see how things then pan out. But I'm going to put quite a bit of detail around the jobs data today, because it's a good way to set us up for the new year. Okay, right. Also, as well, if you do not think that it's going to be 160, or you do, then you can win yourselves a free account. We've got 3 10k two-step accounts to give away in the stream. You still have time to get involved in this as well. If you go to the YouTube video, go to the description section underneath, you'll see a link to a form. Click on that form and you'll be taken to a page which will you just enter your details in there, what you think that the jobs number is going to be, and then from there, maybe if you get it right, then you'll manage to get a two-step account, which is not bad when you consider that it's free. So yeah, that's a good way to start next week for sure. Now, before we get onto the non-farm payrolls themselves, what I want to do is I want to just quickly talk about what we're doing next week. All of this month is all going to be focused on payouts, because as a prop trader, if you're not being paid out, then you've got some problems. So payouts at FTUK work in a very specific way. Every prop firm is slightly different the way they do it, and understanding what that payout process looks like is always a really, really good idea right from the very beginning. So this month is all about payouts. You get a payout booster as well on the payouts as well in January, which the team can explain the details for you. But next week, what we're doing is we've had a PDF that's been built. It's beautiful. It's really, really nice. It's got all sorts of information on there on how payouts work at FTUK. You can get access to it through the homepage. There'll be a pop-up box on there. You just stick your email in there, and then you'll be able to download it. And then look out throughout the rest of the month. There's going to be all sorts of interesting content about payouts as well on the YouTube channel and on all the socials as well. Okay. Quick glass of water. Right, let's start talking about non-farm payrolls. I want to really get into some detail to set us up well for the new year, because what you've got to do as a trader when you start to get into your strategy for the first quarter, you've got to understand what the big themes are, and this is basically it. ISM, the Institute for Supply Management, the purchasing managers indices last week, they were pretty good. Above 50 is considered to be good. And I saw a chart a few days ago with that graph lined over the GDP readings in America. And it's looking pretty healthy. So we're going into 2025 with a pretty strong growth backdrop to the United States. But at the same time, we've got some inflationary pressures which are still high. Now, that's not high inflation. It's the pressure on inflation, which is still a little bit high. Plus, when you add into the mix of Donald Trump starting his new presidency, there's a lot of concern in the corporate sector over the new incoming tariffs. Now, there are going to be tariffs. It's a question of what those tariffs are going to be. Nobody quite knows. What is the impact going to be? What is the business impact? So what that does is that it makes that uncertainty something that the markets don't like, and it's something that the business community doesn't like as well. So that is the the unknown quantity at the moment. So plus when you've got an environment of elevated inflation as well, which we have, slightly sticky, plus a cooling jobs market. We've not had a jobs market that's completely crashed. We've got a cooling jobs market. That's the term that I've come across. That equals a much more cautious Fed, and it's likely that they are not going to be as aggressive in their cuts moving into the spring. So what does that mean? Well, obviously this is jobs week, so we have a lot of jobs data to get through. We've had the ADP employment change already. That came in slightly under where we were looking at. We're looking for 140. It came in at 122, but it's the JOLTS. I think the story this month is in the JOLTS numbers. Now, take a look at the actual job openings reading. That came in at 8.098 million, much higher than the previous reading, and also much higher than the forecast reading. But look at the job quits. The job quits came in much lower, so they're diverging at the moment. Now, if you've never come across this data before, it's not complicated. The job quits is basically the proportion of workers that are in the system at the moment that are basically going to move from one company to another. So it's just churn, it's just turnover. So the people that are quitting one job and going somewhere else, but they're inside the actual jobs market. They're not on the outside trying to get employment, yeah? So it's really interesting to see those two things actually start to split apart. So the JOLTS number indicates that there's more jobs there, but basically it's saying that people aren't taking them. Well, why is that? Well, it could be because the quality of the jobs themselves are a lot lower than people would generally be expecting. Or maybe the wages, maybe the salaries, maybe the money is not quite as attractive. But the key point is that people aren't moving. That's really important. Now, what this all means is that there's a strong relationship with inflation, because if you because there's less pressure to offer pay rises to retain workers. So if you have people that want to leave and go somewhere else, the incentive for most companies, if they want to keep them, is to give them a pay rise. Well, that's not there because people aren't moving. So there's slightly less pressure on inflation itself. So if we're going into the jobs day to day thinking that inflation is quite high, plus we've got inflation numbers next week, I think the jobs and the inflation go pretty much hand in hand for this early part in January. That relationship, that is definitely pressure off actual inflation moving into next week. So it's a very, very interesting way of looking at the jobs data today. Now, what is this going to mean for the actual volatility for today? Well, I don't know. What you're going to do is you're going to get all of these ingredients together all in one go. So we've got a background of decent growth. We've got elevated inflation concerns as well. The jobs market is slowing, but it's not completely collapsed. So, should we be expecting no jobs? I mean, anything can happen, but we don't know. Plus, that then would generally mean that the market would be pricing in less cuts into the new year. That is a change from December, from the Fed in December into January and into February. So we're looking at maybe less cuts, that is hawkish. That is staying with the rates that are in there, which is hawkish. With that is pressure on the stock market and upward pressure on the dollar. So from the jobs data itself, my pitch is around about 175 would fit into that equation. Now, I don't know what it's going to be. We'll find out in 6 minutes' time. But that is an important bit of information to have a sort of like a sense of what is actually going on. Now, strong jobs number this week plus a solid inflation number next week, I think that is definitely less reasons to cut, and that would be hawkish. So that is pressure on the stock market and also upward pressure on the dollar. So we'll go over to the charts in a second and I'll show you exactly how that is all going to paint out. But before we do, I have a very, very quick announcement that I've got to make before we get into the actual charts. So we are doing a flash 50% off discount sale. Yes, I'm confetti as well. A 50% sale at the moment. This is something that we're going to just run for the next 48 hours. If you've not got your prop account yet for January, right now is the time to get involved, because for the next 48 hours, we will be running 50% discount on all of our programs and all of our accounts. It's something that is incredibly rare that we don't do. The code that you're going to need is flash50. However, It's only for this weekend. It will run out on Monday morning. And also as well, it's only going to be for the first 100 people. Now, if you've seen our competitions, you will know that they tend to go quick, like really, really, really quick. So if you do fancy grabbing this, do not waste any time. You'll only have a 40-hour window, and once those 100 have gone, they've gone, and we can't do any more. So it's because it's a very aggressive cut, but it's fantastic deal at the moment. So that would basically mean you could go into Monday's trading, get access to the 100K instant funding program for $700, is it $750, something like that? That's absolutely outstanding. Really, really amazing. So yeah, flash sale. Oh, I've just been told as well now that the giveaway, the accounts that we're going to be giving away, that has now closed. No more. That's all done. So if you didn't get your guess in, then that's, unfortunately, you're not going to be able to do that now. You just have to sit and watch the numbers. But you can get 50% off just for this weekend. Okay, right. Let us move on. Let's start to think about what we are doing from a trading point of view. I'm going to bring up the charts and we'll talk through it. I really have my eye very closely on the stock market. I'll just talk you through this. I've got to be honest with you, I'm looking for the stock market to come down. I'm not ultra bearish yet. It's but let me, before I talk about my analysis, because I've been thinking about it for days. We've got the stock market, we've got the S&P 500 up here in the top left-hand corner. I've got spot gold here. At the moment, I'm not doing so well on gold at the moment. I'm on the wrong side of it. That's on a 1 hour time frame up here in the top right-hand corner. And then down here, I've got euro dollar, the FX rate, which I think is the best FX pair at the moment, given where we are to parity. And then also I've got the dollar index down here on the bottom right-hand corner. Now, the stock market here, this is my area. This is where there's huge amounts of commercial hedging here in this price area from 5,790 down to 5,700. Now, I don't want to be ultra bearish on the stock market until we get as low as that. Now, this is a daily time frame, so there's a long way to go. But coupled with inflation next week, if we are going to get that pressure, this is what you've got to take into account. Have that big picture view and where you will then be making decisions. I am not ultra bearish until we get there, but I think that we could get that downside volatility. That I think it could definitely be a thing. I've got on also as well, because obviously I follow open interest as well on the CME. I'm so sorry about my voice. I do apologize. I've got my eye on Wednesday's low. Really, really important. Now, we could get some chopping around there, but you'd want to see like a daily close or a weekly close below there to get lower. But I can't see, I don't know. Every time people are bearish on the stock market, it still comes along and defies gravity, you know. So just be ultra careful if you just want to be uber bearish at the moment. Gold at the moment, I was wrong. I thought that this would be my line in the sand. In fact, I had this on here from a few weeks ago. 2,664 was my line in the sand for the bears, and we are now spent the whole day above there. So I don't know. This is really last chance, really, but it's not looking that good. But the commodities markets, I know that crude oil this morning. If you've not seen a chart of crude oil, have a look at crude oil, because it really has been on a barnstorming rally from about 74 up to 76. On this session, and we've not even started the US session yet, on the base of more sanctions, I think, on Russian oil and all that type of stuff. So commodities obviously getting a little uplift at the moment, but it's the euro dollar which I think is the best trade out there for the new year. Now, I've got to be careful because we're coming up to 1 minute to go, so we are nearly there, and I do not want to miss it. Yeah, so we just got a minute to go. Yeah, just over 1 minute. Euro dollar at the moment, we've got get that yearly close on there, 103.56 here on TradingView. But look, we're in that area where parity is going to act as a real magnet. Really super important. So basically, with that dollar strength giving us that downward pressure on euro dollar, I think is the best FX trade out there, because never discount the power of a of parity. I mean, it really is just amazing. Okay, right, so we've got just over 30 seconds to go. So it's time to now concentrate. Remember, we are looking for 160,000. I've got, well, we'll see. We're down to a 1 hour on the S&P. 15 seconds to go. No gambling. We are traders, not gamblers. Do not forget. There we go. $256. Wow, massive. 4.1 on unemployment. It dropped. It did drop.
Average hours worked 34.3, participation rate 62.5%. The prior to the NFP figure has been revised down 15k to 212k.
212k was the revision number.
256k is a
Look at the dollar.
above the top end of expectations.
What did I say? Look at that dollar strength. See like there. Look on the euro dollar now. 102.41 with the yearly close the way it is. That's a trade down to parity. You know, it really is. Maybe not today, but it gives you the overall sense of the direction.
A decently about 100k above the top end of expectations.
That dollar strength's lovely, bringing gold back in line as well. But that might just test the support down here at 2,664. And as it works though. So that's a strong. It's a strong jobs reading. We get that with a healthy bit of inflation next week. You know, that's your stocks down, dollar up. It should work. But of course, like should and actually working are completely different things in markets. If you've not been trading very long, then you will soon learn that. And the thing is, with trading, and the great thing like working with FT UK is that you don't have to be right all the time. You know, most traders aren't. You know, it's a journey that you go on, and you learn very quickly that you have to put the the plans together, and they can be good plans, but you can still be wrong, and that's okay. It's about what you do when you're right and what you do when you're wrong. That is what makes the difference in prop trading. But yeah, interesting number for sure. Yeah, I think that's given us the majority of the volatility. Right, okay, I've just been told, I think the guys in the back office are just going through the numbers with the people that have won. Let me just see if I can just drag them out. You'll have to bear with me. We have got 3 winners. I don't know the actual numbers that they picked, but all we were really looking for was the closest numbers. So I've got those results now, so we can actually bring you live the results of the giveaway competition. So 3 10k two-step accounts, they go to these guys here. Tatley Bella, congratulations to you. Stephen Pixel Forex, congratulations to you. And Rap-O-Meta, great name. Congratulations to you. All 3 of you get a 10k two-step account that will be wired out to you over the course of the weekend, and that is a wonderful way to start next week in the markets. A free 10k two-step. Who can argue with that? Okay, that's it. We are done. The first non-farm payrolls is on the board, and we are chalking it up for January. Fantastic. Do not forget the Flash 50 is the code for your 50% discount of the weekend. It's not going to be there for very long. Have a fantastic weekend. Thank you very much for watching, and we'll see you all next Friday.